Hi everyone, welcome to my channel. In this video, I am going to talk about one of the lease clause about market rent review. So what does it mean and how to read through this, and more importantly, sometimes the market rent review can determine whether you want to buy that property or not. If you want to know, then stick around. All right. A general term in terms of the lease is that if whenever you sign a 3 years or 5 years lease with the tenant, and after 3 years and 5 years, they can put what is called option. And the option is basically a tenant's right to decide whether they are going to renew the lease further or not. Let me give you an example. Let's say you sign a 5 years lease with a tenant, and this is, let's say, 2026. So till 2026 to 2031, the initial lease. That means the tenant is locking themselves that we're going to be here for the next 5 years, and they're going to run up businesses and all. But after 5 years, they can put a clause of 3 years option. So the lease would be 5 years into 3 years options. Now, when the lease is 5 years, every year the rent is going to go up based on the CPI or the fixed increase, and that is also written in the lease. Let's call it that every year the rent is going to go up 3%. So every year, then that means 2026 you are collecting $100,000. 2027 you will be collecting 3% increase, 103,000. 2028, then again that 3% is going to go 3% of 103. Likewise, rent is going to go up, and the fifth year that the rent is going to go up till about $116,000. Now, after fifth year, your question is what would be the rent for the next if the tenant takes the option, and that's how the market rent review comes in. So assuming for that property the rent is going up only 3%, but the market rent has gone up significantly high, then if it is written the market rent review, that means it will be determined by the market rent. So you generally, as a landlord, you find out through other tenancies what's the market per square meter rent, and this is going to go up accordingly. This is all good for you if the rent goes up. So in other words, your rent is less than the market rent. But the vice versa is also true. If your rent is more but the market rent is lower, then the rent can go down to the market rent. And that is how market rent, in other words, basically saying what's in the market. If your rent has gone up significantly high, it will come down. On the other side, if your rent is low, it can go up. So market rent review, it must be put together in the clause in the lease. Now here is an important part. If you are buying a tenanted property, and that property, let's say a 3 years lease or 5 years lease, and you are into the third year of a 5 year lease, means 2 years left, and you see that the rent that you are currently charging, which is way above the market rent. So after 2 years, if there is a clause in the market rent review, then for sure, assuming the rent is goes up only 3%, and that is still way high than the market rent, then the rent is going to be adjusted. And that is the time your current rent, always do not think about just because your current rent is this much, then it will keep on going up. It also depends on what is the market rent, and if the rent goes down, then your rent will go down as well. So on the basis that you are paying right now, whatever cap rate that you are paying, that might not be the great solutions, particularly if the market rent adjustment happens and the rent goes down. Now there is another way to avoid this market rent review being going down, and that is called cap and collar clause in the lease. If you see a lease, and if it is written that okay, this is the rent currently right now, there is a market review coming, but the market rent cannot be more than 10% or less than 10% of the current rent. So what basically means that this is protected. Cap and collar, right? This is collar and this is cap. It's a term basically saying the rent must be in between the nose in this area. It can't go down significantly, it can't go up significantly, which is not so bad clause. Particularly it protects both landlord as well as tenants. It's a win-win situations, right? Let's take an example. Let's say if you are collecting 100,000 rent and it's going up, on the market review date the rent has gone up, will go up around 110,000. If it is 110,000, the market rent is around 100,000, or even though the market rent is around, let's say, 80,000, but if there is a cap and collar which is 10%, then that 110,000 cannot go to 80,000. it can only go up to 100,000 because the market rent is way low, but you have a cap and collar. So sometimes it's better to have a cap and collar than having nothing. If it is nothing, means it's just a free fall. If it goes up significantly, if it goes down, it can go down. So I am going to tell you one of the instances where we were reviewing a deal and we found out the rent is way inflated, and in 2 years time there is the market rent review, and in 2 years time there is no cap and collar, means the rent is going to be adjusted to the market rent, which is significantly lower. So if you are paying, let's say the rent is 200,000 right now, and if you are paying a 6%, which is like $3 million plus, you are buying this property, and that 200,000 comes down to 150,000, that means that on the 6% basis, that $3 million property can come down to $2.5 million property. And which is why you need to pay attention on the market rent review. You also need to pay attention on the cap and collar clause in a lease, and you need to be absolutely certain that the rent cannot go down significantly lower than the rent currently is. If you decide, then only go ahead. If it is not, then perhaps it's better to move on from that deal and look for another deal. I hope you find this videos helpful. I hope you understood the market rent review. If you have any questions, please put together in the comment sections, and I love to hear from you and love to answer those. Thank you so much for watching, and I'll see you next time. Bye bye.